Hi guys. So let's just start for the equity research workshop number two. And I believe not that much of people is going to come today, but like we are still going to discuss this. Like for Elijah. Yeah. So let's just start today. And basically that I just want to inform a little about the intern project timelines. That's right now is roughly the end of the week three, and hopefully that everyone just finished the financial modelings, investment report, start to working on the report and the pitch deck, and we are going like. Don't forget that week four, it's going to like turn into everything's September 29th. And we are going to have the presentations for the conference on October 5th. So the content for today is that we are going to cover is the valuation model. Okay. We are going to cover the evaluation models, construct like the investment thesis and rationales, how to make it professionally, and also how to build the slide deck. So hi, Donovan. Yep. And yeah. So yeah, let's just start with like some of the information we have, like how can we capture the equity research data using the tools. So I'm totally sure that Yahoo Finance is free. S&P 500, I think some of the stuff is free. And if there's some resources from your schools, probably Capital IQs, Reuters, or Bloomberg's, it's good for you to capture some data for valuations. And I think like SEC filings that every year is the companies that they post their the report over there, and you're gonna see there's lots of data regarding their financials. You can definitely use it. And the other like the stuff for EV's world, Mintel's, Gartner's, where like for those research, some of the data for when you're trying to make the rationales or you're trying to make the assumptions for um your valuation models, feel free to use some of the numbers on the reports that those like talent peoples they made it. So yeah, definitely using some of the tools that you can find in order for you to do the good valuations or write the good rationales. So those are the simple stuff that how do we get the data and how we are try start at first. So basically, we let's just jump into the business valuations. So do you guys like really familiar with that? If yes, then I will just go over that really quick. Donovan or Elijah, anyone give me the response? So all right, it seems that I didn't get any response. Just give me an emoji and saying that whether you are okay with these valuations. So all right, I saw the hands from Collins. From Donovan. So great. So are you really familiar with that, or you are need a little more talk regarding to the business valuation part? I mean. Is Horace or more talk? Okay, great. Yeah. I know that sometimes writing rationale is not not hard. But like for business valuation, it takes more time. So let's just do some statements that some people mentioned since valuation is a quantitative method, the result will be objective at all. But the answer is not really because it's even for absolute valuations that you are trying to make assumptions based on your understanding of the companies or the industry. So sometimes there's no the most accurate evaluation method, but like it just pro as long as you learn a lot, you studied more regarding to the companies or industries, then you can make more accurate assumptions for it. So the same statement is not exactly true. All right. And for the second statement, a good model plus sophisticated research equal to more accurate target price. This is also not at all. Because some people like Keynes explain it when the facts change, I change my mind. So sometimes the news or there's some people they feel like the market is good or not, like for those everything. This gonna influence the company's valuations. So at this point, so we are going to stay updated on those elements that impact the share values. For example, it's the rate cut like a couple days ago. For that, it really affects the market at all. So we are going to do some like like the update research or the another coverage to make sure that the valuations is get updated.
Yeah.
So
Yeah, let me just add a new point. Because like for the valuation parts, you are using lots of like assumption that based on your understanding of the companies. And for every of like the analyst, when they are looking at a company, they have like the first stance on like the companies, like the facts, the situations, or like the status quo. So and you just have the opinions when you are just firstly to see one companies. So if you but based on like every analyst like perspective, if you have like lots of bias in counting like the one companies, then your like the valuation will not be really accurate. So yeah, so this is like the double side blade um for every like the analyst. So when we just first approach to a companies oh like the financials and like the company's overviews, we should like to take like open-minded like mindset. Otherwise our like valuation will be little biased. All right.
okay, great. Yeah, thanks, Horace. And yeah, and also like I have another two statements that I just figure out from most of the people when they're thinking about this. So like number one, more quantitative models equal to more accurate evaluation Bs. So this is definitely not always. So some of them like using really fabulous models besides DCF or LBOs, they probably use like sometimes they use DDM, they use AE or NAV valuation methods. But even though they have more models, that doesn't mean the valuation could be more accurate at the point because everything is based on the assumptions. And if you like just as what Horace mentioned, if you are biased in studying the companies, then your assumption might be wrong or might be not accurate as to what the company is doing in the market. So think about this and trying to be accurate as long as you study more, you understand a little more about how everything works for that industry. And the other one, it's some people mentioned valuation is just a number game, and result is more important than process. So for this, I have personal experience on how the valuation is pretty much important, especially right now. It's like most equity research comes from the buy side, from sell side. But like for buy side, if the people still would like to acquire a lot of shares about the company stocks, then the valuation becomes pretty important as you are trying to make sure that the money you spend is worth it, right? So the valuation is not just a number game, that especially if you would like to invest in real life, that valuation is going to be really, really important. That how did you think about how to get the share price you calculated? So the process is pretty important as well.
Yeah, let me add one point that for the sell side, like the banking's boutique, and they are trying when they are doing like equity research, they try to price like the stock high. It's like and then they will sales to is like the high value like the customers, clients, and they will and the sell side bank can get like the commissions, but for like the MMA part, probably they will value really like the accurate, give like really short, small range. And but for like the buy side, buy side will when they are doing like equity research, they'll be really, really specific and accurate in the valuations. Otherwise, they'll not pay the monies to buy the shares.
Yeah, so this is a little difference about like how those bankers works, and yeah, especially it's better to understand the valuations for the companies as well as you are not spending that much of money it's like to buy something is overpriced, right? Yeah. So do you guys have any questions regarding to this? No questions, right? Yeah. So I mean, like those are just like basic rationales, and let's just get into the fundamental concept of valuations. As Donovan mentions, he would like to have like a little more talking about this. And yeah, so it like the value of financial assets comes from the futures cash flows they generated as we using DCFs to estimate the price. And it's pretty important to understand where those things comes from, like the source, as you to value to estimate the values, then to understand the source, the uncertainties regarding to the valuations is pretty much important to the assets and the model itself. And so let's just like if you would like to master on it, understanding the financial statements, accounting rules, financial structures, profitabilities, risk for the company, it's really important as well. So yeah, it takes like me like 2 months to get familiar with those when I'm firstly studying this. And so at this point, that's how do we capture the profitability and how do we understand the market itself? So there's lots of stuff that wait, do I have something before? No. So basically that's short-term forecast within 6 months, it's better to use like regression models, but for long term, it's probably using like valuation, DCF, etc. And for regression methods, sometimes it's accurate, but like I know that most of the banks they just run it as one of the model itself. They're not actually using regression that much. It's not the best ways to present it as well. So, but like the trend methods are more accurate for revenue forecast, but less accurate for profit forecast. This is the one that is pretty important. So sell side people they are just trying to price the stock high. So no matter how they can get the values higher, they are trying to do it. But like for buy sides, they are more accurate, so they run more models. For the market anomalies that you have to think about, there's some of the companies in the market that are smaller and smaller than the big firms, so that the small cap stocks that have different risk, and they're probably gonna have like a low price or P ratios, low price to book ratios, and there's some of the effect that gonna affect the stock valuation overall. So like weekend effects, January effects sometimes like some company or industry they got affected by those like different stuffs and the valuation during that time it's going to looks like bad and to think about capture more like market or macro data so that you can have better understanding of it. So for when we talk about like the evaluations, the firm's true values, there's two different stuff. One is book value, another one is market value. Market value is actually how you get for the stock price, and the book value is how there's a little difference because regarding this. And so at this point, that book value doesn't accurately represent the company's future earning potentials, just the numbers on the balance sheet, but like to look at it significant differently between the book values and market values, it really depends on the formula over here. The enterprise values minus the debt minus the preferred at the value of the associate companies, and it does give you the ideas of what is the equity value, where we got the market value. So for the valuation method, like none of them are accurate, like 100% accurate. So each of them has the advantage and disadvantage. And there's we have besides the absolute valuation method, there's going to be like the relative valuation methods that we use the comps to verify each other and finally determine the value for a range at the and in the end that we have the football field chart over here that I think like I showed it like last time. And I think like Horace is going to tell us like how we can make those type of graph in the next couple sessions. And but like just for you understanding that there's going to be a lot of valuation methods and you can definitely run it in order to make you a better range, to a better understanding of the true values of company stocks. So let's just start with relative valuations. Do you guys have any questions on it? Just give me a thumb up if you don't have any questions. So I can make it okay, great. So I can make it really quick about what is the relative valuations, like the first so the comparable company analysis. So at this point that besides the DCF, you have to make a lot of assumptions for the relative valuations where just compare with some company in the industry, like your direct competitor. Like for example, if you are Costco, your direct competitor is Walmart or Target or Kroger's, like those companies, so that you use them as um your comparables that you average the values from them. And because like they're direct competitors, they're right comparable companies, so you use their financial stuffs and you doing making an average and then you are using that to calculate the share price for Costco. But there's some problems on it, so I will talk about that later. So the pros and cons, it's like because every data is public information, so it's easy to acquire the data from it. And because for this method, it's actually the assumption of efficient markets. So that's everything supposed to reflect on the informations, including the trend, risk, and development like speed. And also like the investment that not only account for minority stakes, that the value that obtained can be used as the reliable indicators for companies' values. For those are the count for this method. But it's difficult to find a large number of comparable companies, and especially if the company is small market capitalizations or lack of research trackings, for those it's going to be it cannot reflect on the market itself. So that's the reasons for comparable companies. There's the problems, but like for this, we are going to consider how what makes it like different. So we should focusing on the indicators that how we figure out two companies are the same and what valuations of the companies at the premiums were discounts to its competitors, the reasons of it, and also how companies' credit ratings. That is pretty important. But like for sometimes it's you cannot figure out who is your direct companies for compare, so that you have to make sure that some of the indicators are similar to the one you are trying to do. So some of the indicators, long story short, we are using the indicators like P ratios, PB ratios, EV EBITDA, EV revenue, EV EBIT. For those are like the first tiers is pretty much the the ones that we use more frequently. But like there's also you could use like value profit assets over the growth rate, like underneath. So we will send you out like some of the guidance through like how, doing the evaluations like after this workshop. So I think it should be fine to for you to just take a look at what is this and what ratio we're trying to use in order to calculate for CCA. So compare for different levels of hype cycles. Sometimes people consider this like in which state of the business you are trying to use different valuation methods. But like just for your information, sometimes people doesn't care about it. So yeah, just for you to take a look on that. Like most people using this like this methods to benchmark like which life cycle of the company it is. So the difference between the enterprise values and equity values. So equity value is just the price that issued capitals times the total share outstandings. So some multiples are like PE ratios, PB ratios, price to free cash flows. Those are the multiples they use. But like for the enterprise value, it tells reflects the values for both shareholders and debt holders. So the enterprise value is the one that we calculated most frequently for this, and the equity value cannot demonstrate how good the company's profitability is. So we use the enterprise value instead of the price. So at this point that we can definitely writing like big table like this. This is the one we do for one of the competitions that it's really big tables and we are definitely figure out different sources and to get the data. Like we use EV revenues, EV EBITDA and PE. At this point we doing some calculation using this. So one of the notice for comparable companies that what we should do, we have to check that everything is good on your comparable company side. And we are trying to make sure that don't forget to standardize the currencies if the company is not in United States, in UK or in Asia, or don't forget to adjust the operating indicators. Sometimes like you use wrong data, it leads to really wrong results. So be sure that everything get checked. Another one that I want to talk about this really quick because the method for it is pretty much the same. You are not using the comparable company for it. You are using the recent deals of in the same industries. For example, if Costco they acquire another small little companies in the market, like for example, like another companies with 50 stores, then we can use the deals to do some valuations to compare what is the recent or current trading trend that can affect to tell you more about the value of those type of business in this industry. So at this point that you are make sure that target company's business financial should be comparables, transaction size. If it's big, then it's good. Or it's small, then you kind of think about to balance a bit about how can we compare these deals to our like this firm that we studied.
Yeah, let me just add a bit because like the difference between present transaction analysis and the comparable company analysis is that because like the present transaction analysis that is like the recent deals, so that can better reflect like the right now the market how does market treat these industries and like the multiples and overall like the financial situations. And then if you right now you want to evaluate like the companies that in this industry, so the past or recent the deals can be a really good like the benchmark for you to do the valuations.
Yeah,
But
so
for this one is but for the present transaction analysis, you have to find all the deals. So that is like the most important part. And probably somehow you if like this industry is really steady and there's no that much of like the transactions, so probably like the before like all the data or transactions are in like the 5 years ago, and that should be not really accurate for right now you're taking the valuations.
yeah, so I just want to mention is the pros and cons for present transaction analysis. So basically, based on the public information, analysis of premium is actionable and also to provide the reference information on the possible buyers and their willingness to and abilities to bid. But like sometimes it's hard to figure out some transactions, like historical transactions recently at the point. And not every aspect of the transaction is reflected on the valuation multiples. And think about the time and also the impact on the valuations. So at this point, just as Horace what he mentioned, the data might be skewed. So at the point, this one, if it's feasible, you can definitely use this as one of your evaluation method. Otherwise, just get rid of this. If you don't have enough deals, if you only have three, then it's hard to figure out the average of it. But if you have 10, feel free to use that as well. The deals it's in best is like in between like 5 years, 3 to 5 years. So don't get the deals like 10 years ago. It's outdated. So the present transaction analysis, we at this point we just need to understand the EVs and implied EVs, and we got the EV revenues, EV EBITDAs, and we use that to calculate it. So sometimes like the P ratios also it works for the present transaction analysis. Do you guys have any questions on it? No? All right, sure. So let's just get into DCFs. So right now we just finished the relative valuation method. We just jump into the absolute valuation method. So a little bit about the cash flow. So are you guys familiar with that? This is really cliche part. Like what is the cash flows? How do we get the difference in the accounting rules? And it reflects the yeah, how much they can produce, how much money is that companies they can have for the business. So at this point, that it's more accurate valuation methods at some point. So we have to consider the time values, the monies, it varies differently, and also working capital requirements. So you can definitely see that on the conversion cycles, how flow is actually doing that. You have the purchase, you have transport, you have storage, then you manufacture. There's going to be some things you have to supply. You have all the monies that it runs through this cycle. So we call it cash flow. Then how do we derive the cash flow? So at the point that based on the debit, credit, balance in the accountings, and also like the statements derives from 2 years balance sheets and current income statements. So just really simply understanding $1 today is worth more than tomorrow's, and tomorrow's cash flow needs to be converted to today's value using a discount rate. And thirdly, that the cash flows are at different points in the futures are discounted to the same point in time now. Then we add it together for the cash flow methods like DCF. Any questions over there? It's just really intuitive. I don't think there's questions. It should be easy, right? So one of the examples that I think like because for today we are going to cover a lot of stuff and demos, so probably not going to like give you guys the time to think about this. But like if you have like the cash flows, 1 millions, 1.1 millions, 1.2 millions, etc. for next 5 years, the discount rate is 15%. Then we can calculate the cash flow discounted back over here. We got using the NPV formulas, we got 3.93 millions. It's not like you just add everything together because there's the discount rate. So you discount it back to this year's, and we're gonna see over here. So I don't think there's going to be the question, right? So just for you guys information about like what is the discounted cash flow concepts. This is how we calculate everything. It's pretty intuitive, it's simple, but like in the Excel sheets, you're just gonna feel a little messy on it because it's a lot of blocks in the discounted cash flow, like Excel sheets. But we're gonna demonstrate that, so no worry, guys. And then for the rationales for DCF, we have to make sure that we calculate the important stuff. WACC, the weighted average cost of capitals, unlevered free cash flows. So the core idea is actually to forecast the periods for exceed the maturities of the companies for 5 to 10 years. Sometimes 5 years is enough, but like some of the case regard you to calculate that 8 years or 10 years. But the longer coverage period, the grade of the subjectivities and the uncertainties came out. So make sure that you just based on your studies to get a 5 years forecast is enough. So unlevered free cash flows, this is pretty important. You have to make sure that you got the cash flow and then you discount it back so that you get the values for in nowadays in today's valuations. So the basic formula is EBITDA minus the depreciations and amortizations. You get EBIT, you times the one minus the tax rate, then you get NOPAT, and then you add it back to the depreciations, amortizations, add back the working capitals minus the capital expenditure, you get the unlevered free cash flow. You should be fine. That you just Google it, and if you don't you are not familiar with the formulas, feel free to Google it, where you ask like ChatGPT that it's going to be easy for you to catch up everything. So in the Excel sheet, it like the best version is actually get set it everything well, so that you shouldn't be any problems on the model itself. And then besides that, we have to calculate WACCs that what is the cost of equity, what's cost of debt. You're gonna figure that out and calculate the discount rate. like the WACC as well. So the formula is right there, and I think that in the models we already write it. And just for your information, how does this calculated? And it's supposed to show something look like the right hand side. And some of like right here, it's some of the numbers that you can definitely take a look, like the risk-free rate. It's 20 years T-bill like returns, and also the risk premium that some of things they already provided, like what is the premium for different sides of the market, and especially that the risk premiums you add 0 to 0.5% as well. And those are the indicators for how you get the numbers. So like 20-year T-bill return rate, risk premiums. So I think like some like a macro study people still already like cover this. So just Google it online and you will definitely see those numbers and you use that input in the Excel models to
Yeah.
calculate that.
Yeah. And also for like the betas, the market betas, so you can find it on like Yahoo Finance or anywhere else that are already calculated for you, and that indicate like like this industry like overall like the risk and consistencies. Yeah.
I think I covered that in the future pages, if I remember correctly. And
Yeah,
side,
there's the beta.
yeah. So for unlevered betas, so I just want to mention a bit about how to calculate the relative data betas for you. So definitely compare with other companies where you're a direct competitor in the market. To calculate their unlevered beta. So you average it and then you return it back over here. So this is how we do it for super micro. Like the second coverage, we run it again that we used betas from Hewlett Packard, Dell, like those companies, and then we average back and calculate it back. So at this point, that just following this, I believe it should be really intuitive for you to understand everything. So like for DCF assumptions.
Yeah, yeah, yeah. One more things to add up. Because like for the betas, you can using like the market betas, and that will contain like the average of o overall like the markets. And also you can like using this one just choosing like several comparable companies, and then to calculate the average beta for them. And you can use this as like the betas for your calculations. And there's like probably a little difference, and you're gonna affect like
A
overall
bit.
like the valuation. What did you take, or what was your expectations for overall values?
Yeah.
Yeah.
So no worries using either ways to get the betas as long as you are really confident no matter which methods you are more familiar with, just use whatever the most uh relative one that you are able to present it where you can answer it to other people to persuade them to for those type of things. Otherwise, yeah, there's no big difference on this. Lastly, we have to think about the terminal values for the companies. So there's a couple methods for DCF to finally you derive the values for it. So perpetual growth methods or exit multiple methods, like those are two most important one or most common one you see. And there are two formulas, math a little. That's how do we calculate it? So the terminal values using the multiple method, you use the exit multiples times the multiple matrices. So some numbers like EV EBITDA, EV revenue, EV EBIT, those are really relative one. And the other one is you use the WACC, you use the growth rate, the one you estimated for the companies that they're gonna grow for the future. Like forever. Like Costco, they are going to grow like 10% growth every year. So that you just put the growth rate right there. And you project the final year of the unlevered the free cash flows. You using that numbers to calculate that for the terminal values, use perpetuity method. So at this point that we are going to have the different methods like in the models. I think like we have set it up, or otherwise you can definitely calculate yourself that this is not complicated. There's two methods. You just trying to think about what values that you're trying to use to calculate your terminal value. Okay. And one of the notice that before I end up talking with those like words, we are going to jump into demos, is that assumptions for revenue and operation profits for the last year forecast period should reflect the level of normal years. It's not going to be the one that's the peak or the bottom of the business cycles. So try to, for this page, try to make sure that's all your assumptions, main assumptions. It's normal and correct. Otherwise, it's going to affect a lot, like the revenue. It grows 50% this year, but it won't grow to 50% next year. So at the point that you are trying to make sure everything is logical and makes sense. Everything's supposed to be equivalent and stable. So
Yeah,
that
and
otherwise, yeah.
yeah, and
Otherwise, the
also
value
like
is different.
yeah, and also like in this EF, when you are trying to estimate like the WACC, the weight, and that one will cost like the loss, like your share price is that high or low. So if you have like really, it's because like WACC is really sensitive, and if you just adjust it too high, or you're gonna affect that overall your valuation are really low. But if you adjust too low, then you are really, it means that you are really confident that this companies will grow a lot, so the share value will be really really high. So be careful on adjusting like the WACCs.
Yep. And so let me just share an Excel that's how we make the assumptions on it. So give me a sec. Okay. Okay, great. So let me just share my slide. So can you guys see the Excel sheet? Yes? No? Boris? Okay, great. So at this point that I think this is the normal page and the other one is the one we are using for take a screenshot for the slide. So anyways, that's for the DCEP files, you can demonstrate like easily to see the sales, the gross profits, EBITDAs, the calculations on the first page. The first page is the one you input the historical periods data and you put everything on the yellows. Then you estimate this year's data. Then you project for next 5 years. So everything is projected afterwards. But like trying to make sure that you have the correct historical data that's on the financial like statements, especially like you have like Yahoo Finance where you have Bloomberg. So this is going to be easy. And next, we don't forget to put the net working capital. This is pretty important. This is how the balance sheet and the cash flow statements that have like everything over here. So don't forget to project this as well. Because I've just figured out someone just forgot to put numbers on this page, so that's the value give you like negative cash flow. And calculate WACC. This is pretty important that we are using this to estimate the betas. Like from my perspective, I love how to use this and also run the sensitivity analysis to see what is the difference, what gonna change the WACC as well. Because this is if you vary a little of it, it's gonna affect a lot of the DCF valuations. So over here, it's actually the assumption page, like how you make your assumptions based on the growth in the futures, or how does that going to be for the companies that you have like in depreciation, optimizations, or the cash flow statements. How do you balance it? So you can definitely have your rationales why you make these assumptions. And I think like you sometimes you use CAGR. I personally using CAGRs for it. And if anyone has questions, feel free to ask because at this point, I just run through like, the process, how I'm trying to make the assumptions for DCFs. So at this point, like the sales growth for Costco's, I usually set 5 scenarios, but like 3, it's totally fine. 3 is enough. Like 5, it's a little hard to figure out the balance, the boundaries between two different scenarios. But anyways, I have like the base levels, management levels. That means if the companies get managed well, then they have a better performance. And the upside is the one it's the company is going to boost it up. It's the ideal case. So it's most likely not going to reach as well. Downside one, it's if they perform a little poor, and downside two means just in the market, everything sucks. So for those like assumptions that you have, you're using it to run like different case, you can have your different targets. So at this point, just make sure that you have not only one case enough. So like you have three cases, it should be fine. The same for how to estimate the current assets, current liabilities. For those, it's actually help you to get the results for net working capital. So do you guys have any questions on it? So just fill out the numbers based on your observations and your studies on markets and industry. Questions?
Yeah, and don't forget to write down the assumptions right here, because like in yellow part,
Yeah,
in the
exactly.
bottoms.
Yeah,
Yeah.
like those are a really good indicator for you to take a look on that, especially for the company like Costco we just studied. So the inventory health is pretty important for us. And there's a lot of like the day payable outstandings, like and the sales outstandings, like how you sell your stuffs and everything's like how you going to pay. Like this is going to affect like companies' reputations and management efficiencies. So don't forget to take a look on this part. I think this is pretty important. It tells you a lot of information on it. So yeah, and definitely you can take a screenshot of DCF in the end. You take the screenshot in the DCF and then you paste it on the appendix part of your slide deck. So that if someone asks you a question, how did you derive this, then you can explain it in a stock pitch, a conference or a stock pitch event. And lastly, I would like to mention two stuffs. Number one is how to calculate the numbers. So you have revenue multiples, you calculate the present value of forecast free cash flow, then you calculate the fair price, something like that. You just make sure you have your multiples, you have your revenues, all kinds of stuff. You calculate the enterprise values, calculate the fair price. So just using the methods that we just introduced in class. So sometimes I just keep writing like those like methods in order for me to have a better understanding of those formulas. And it shouldn't be that complicated as well. And lastly, I would like to mention one thing is the WACC. So because we know that's changing a little bit about WACC, they're gonna change the price a lot. And also like if the exit multiple is different, then it provides you different ideas. So at this point that we are going to running the sensitivity analysis afterwards. So you can have not only the number, but a range. So you use range over there, and then you have like several different methods to give you five different range, and then you just figure out what is the target price, what is the target range for your valuations. This is how DCF and how a valuation part for investment banks they are trying to do. Okay, so do you guys have any questions on it? Feel free to ask questions, Elijah and Donovan, because I think this is pretty intuitive that we can share and discuss our experience on how we use DCF and any concerns over there. So no questions, right? So all right. So let's just jump back to Jerry and Horace in order to talk about the investment thesis and the how to make the slide deck as well.
Okay. Hi everyone. I'm going to quickly go over how to write a solid thesis. Next page. Okay, so firstly, you kind of need to understand the nature of investment. The role of equity analyst is provide clear thinking and rigorous analytical methods, and to by establishing and validating this investment framework, and then we can offer like insightful and forward-looking investment recommendations. And also, investment is a field that require long-term focus and continuous learning. And it doesn't mean like your investment thesis from the last time. You can just use the same format, use the same ideas. Like there are many different cases in different company analysis or equity analysis. So just remember to be flexible. And next one, as a analyst, you should construct your own investment framework. That is, you want to like convince yourself before convincing the investors. That's simply because once you only if you have your own ideas about the about the equity, you will be able to convince others better. Next page. Sorry. So, firstly, from the microeconomic analysis, even though like in many times we just analyzes equity just from the company behaviors or just from the industry, something like that. But from microeconomics, that's also necessary. Examples including the single rule of Milton Friedman, that this theory posits that the changes in money supply are primary factors influencing economic activities, and also like things like money and inflation. And secondly, another example will be Buffett's view on microeconomics. So many people think like he doesn't pay much attention to the microeconomics, but in specific conditions, he also may choose to hold large amount of cash and buy heavily at the right time because of the like general market situation. So we need to understand the impact of these microeconomic factors. An example like will be maybe during a economic decline or during sudden situation like COVID or something. We need to combine the larger market environment to do the choices and make recommendations. Next one. And analyzing stock market volatility. Simply I will explain like three rules here. The first one will be the pendulum theory. So stock market volatility resembles as a pendulum swinging between the extreme pers pers pessimism and extreme optimism. And the next one will be the relationship between microeconomic and market volatility, just similar to what I talked about last slides. And the last one will be the nature of capital flows, like factors like growth rate of the money supply, overall market PE, PP ratios, and the cost of capitals. Like these are all key indicators of capital movements. So, the series related to market volatility is, of course, just more than this three, but remember to analyze the volatility and remember to analyze the risk or something, the changes before you making an investment.
Yeah, so I just want to add up a little bit about like the macroeconomic effects. For example, if you are the companies, you are selling the products, we're selling some consumer staples, then if there's the economic downturn, it's probably not gonna affect that much for the purchase because everyone, living creatures, they are trying to, they are still going to buy something for surviving, right? So, but like for some of the companies or some of the industries like airplane or like if there's COVID-19 comes out, that's it. The Boeing or Airbus, those like airplane manufacturing companies probably not gonna have that much of the orders because economic effects. So at this point, just to make sure that everything's in the macro perspective that's gonna affect the companies like developments for next 3 to 6 months or even a year. And also like for something like rate cuts or inflation rates, what about the consumer purchasing price like CPI? For those macro indicators, then we have to take a look on that in order for you to make a better investment decisions as well. So I think like in the Diageo case we did, so we are definitely looking at how people is trying to purchase like after COVID-19. And for that, we are supposed to take a look on how like the CPI itself and also how the market affects the people's buying powers at the point. So think about those macroeconomic stuff, and that get really gonna affect how we make the assumptions for the valuation part. All right.
Okay. So next step will be building and validating your investment series, making investment recommendations, not only especially the own framework, but just remember to continuously validate their effectiveness. Um, well, I have to say, like at the beginning of project, you exams, you need to list your primary investment thesis and like during your research process, like during your market analysis or company analysis, you will gain a lot of other insights about this equity, and you need to continuously update and validate your investment thesis to make it contains your newest and the best ideas. So, for example, like Buffett's investment philosophy can be applied beyond the U.S. market and adapt to the reality of Chinese market. So it's simply well, I mean, does Buffett started with like a investment philosophy that can apply like all over the whole world? Of course not. He also like just begins from maybe from the US market or just maybe from started from his state, but as he continuously update and validate his philosophy, like that is it. Next one. So drafting and applying investment recommendations, understanding the investment thesis. So yeah, that's as I said, it serves like a strategic decision-making tool. And remember, it's just a tool. And investors and companies can use investment thesis to decide whether to pursue a particular investment and later to analyze the rationale and correctness of the decision. So yeah, it is just a tool. Remember, the most important thing is you present the most valuable things to others and try to convince others. Yeah, and also remember to include some case considerations like uh, the questions like, does this investment align with the intended goal? What could go wrong? What do the financial statements indicate? What is the growth potential for this investment? Yeah. And last one, just document the most but present the list. So documenting everything is writing helps investors to make more informed decisions. But you need to provide investors the most essence thing, the most important thing. Yeah, next one. Yeah, I will give an example. Um, bad or versus good thesis. So let's see on the left, we can kind of tell it's not a very good thesis. So it doesn't tell their rationale, and you can see like it doesn't make a lot of analysis or doesn't support any give any supporting evidence. It just like give you a sentence and does not contain anything like as you say the sentence, like you know the the writer's ideas, but you cannot really say like it's convincing. So on the right we can say like um yeah, this forces us on the right is seems to be more convincing. As you say a large paragraph, you firstly think, okay, this is well polished, and also like remember to include this stats or just to include some numbers in your thesis. This will make it more convincing, and also remember to use some professional languages. I mean, yeah, that's kind of a trick, but remember to use this. Well, just remember, don't use too much normal words. Yeah, like I will like focus on Gen Z target market. I mean, of course, somebody else may not get know like what is genes the target market, but they will think like, oh, okay, it might be a professional words, and oh, okay, that's interesting, and you know, this will make your investments is a little bit more convincing.
Yeah, let me just add a little bit. Yeah, just like the Jerry mentioned, to be professional, so we have to using like the professional, like the academic or like the formal knowledge, con tones in writings, and yeah, supporting your investment rationale. Like I like the in the left side hand side, it's just like the sentence of like the conclusions or just something you just find. But you need like the more details to back up it. Otherwise, not really solid. And then, because like if you are writing like the paragraphs and they include like lots of like your logics when you are how to approach to those like your rationales, and then you have like the data to back up it, and you're gonna and that's become really solid. And when other people are reading your reports and they're gonna look at this and then go through the rationale that you just mentioned by your logics, and then that is the way to convince like the readers and to indicate that your reports are valuable.
Yeah, so one thing to mention is that even on the right hand side, you see there's the big paragraph you write it for the investment rationales and to the investment memos. Like those are actually the screenshot in the investment memos we have. Yeah, it's really clear and it's in logics throughout the entire paragraphs, just saying that we have event A, event B, ideas C to support this investment thesis that is going to make it a boosted and a upward growth. So for this, if you have a presentation slide deck, please don't paste this information into directly into your pitch deck because that is ugly and that is not what people would like to see. So for example, if you have like revenue expansion in 25 to 30% for next 5 years CAGR, then please using graphs. Graphics is way better to demonstrate all your logic throughout this paragraph. Even though you know that you are talking the same things that what your paragraph mentioned, but please using something else, graphic or visualizations to make it better, looks better in order for you to present your slide pitch. Otherwise, like pasting the paragraphs like last conference that so many people do it, it's not that good at the point.
Oh yeah, so one last thing I would like to mention to write a really good thesis. So after you just using like the framework that we taught you guys last week, and then you can well formulate lots of ideas about like the company's overview, the company's like the strategies, what are they doing, how to drive their growth, and then you can just mention it to use based on that to construct your thesis or rationales to make it really concise and clear, and then back up with lots of like the details and analysis. So yeah, that's like a really good way. You combine like the last week what you learned and then to form like the investment thesis and plus like some hints where we just mentioned here, and then you can form really unique one. Because like when you're reading like other analyst reports from like the big banks, probably they are not real. Somehow they will provide like unique perspectives, and somehow like they're writing really cliche stuff, just like copy paste from other reports. So we try. So in every of like the reports, we would like to see every of our analysts can try to form like the really unique perspectives, unique rationales, and that will help you also in the future if you are doing like this type of stuff in your jobs, and that will make you really special. Yeah, because like I when I went to like the Goldman's like the info sessions, and they just told us they try to let every analyst to provide like really unique perspective that others didn't say it. So based on and we just found if you are using like those like consulting framework to analyzing the companies, that you can find something that didn't appeal on the top or like surface levels. If you just dive deep into the companies, and then you can catch lots of like the insights and special points, and then you can write it in your rationales. So that's like the experience that I have approaching like using like the to the frameworks, and then to get like the really good thesis, really unique one. All right, so yeah, right now it's my part to talk about like how to make slide. So firstly, the bankers, especially like the analysts and associates, they're doing like the Excel plus slide deck and like the 50/50s every days routines. And and then for the slide deck, the PowerPoint is really the most popular one. I know like most of them using like the PowerPoint instead of like the Google Doc. And yeah. And then firstly, when we are writing the pitch deck, the copy and paste, the diagram, chart, tables, and lines are not appropriate. We because like it looks like unprofessional and somehow like not really good, not suit for your like the overall like pitch decks. And and like someone may concern like the copyright credibilities from other if you didn't cite it or something. Like if you're doing that and somehow they are trying to they're not believe that your points. And then secondly, the creating professional deck take times, but detail drive the success. So and also like you have to take care of like the mistake like the margins or like the typos. You have to double check those stuff and also like the font size to match like the titles and also like the body paragraphs. And then also there are like several tools I will just mention and it gonna help you to create like the deck or like the graphics. Okay, next one. Okay, so firstly, doing the deck, there are like the 4-3 decks or like the 16-9 decks. And I believe like the admin just provide like the slide deck template for you guys that is like 16-9. But yeah, but in the past, like the bankings using like the 4-3s make this decks. And then the really common setup is like the 4 blocks like this two pictures. So like the left one is from PWP and the right one is from Barclay. And yeah, they are using like the 4 blocks to demonstrate the logics and to show the information. So that means the 4 blocks or like the six or like 6 block in like 16 lines, they are contain like the informations. You can write the point like the bullet points like right here right there the bullet point it contain lots of words, right? And then also you can insert like the chart to make everyone make like the audience can easily to accessible and understand what you are doing. And then yeah, one more really important stuff when you are right no go going back, I would like to mention. So if when you are writing the slide deck, one page, and you have to figure out, so you just think about that you are trying to explain to tell stories, and then from like the top left to the bottom right. So you try to make a really good connections between all the content that you would like to put on right there and to make really good stories. And you can make a good transitions and also contain information. Also, somehow you're trying to explain some diagrams, some graphs, and make it like this really smooth transitions. Yeah, next one. Yeah, the benefits using like the blocks or like 4 blocks or 6 blocks. Somehow you can the benefit include like to make like the content really logical, and just like telling a story, as what I mentioned, and then also clear and concise. You don't need to contain lots of like the words or just like the whole page of like the words. Oh, nobody gonna read that. That's very ugly, and they cannot capture all the like the information that you'd like to say. And also, using bullet point to easily access the information or the content that would like to say it. But because like when you're doing like the pitch or like the presentation, you don't have that much time to 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 explain all the stuff, all the information. So it's a bullet point, and you can bold some words, some specific the characters or words, and then you can and make the and also mention like 1 to 2 points. That's the most important ones, and let people to capture your ideas and understand what your logics. But the disadvantage is that firstly the visualization you have to consider like what kind of like the contents you want to put in right there. Somehow like you have to consider about like if there are four block, you're gonna take all the words inside, or you have to do like the two like the two blocks for words and two blocks for visualization. You have to consider about this, and also align the margins because like you don't want to make make like you want to make some little like the professional so margins so small details and then also like draw the visuals take times so yeah and then also like there's like other like the setup for the page probably like doing using the big tables. Like this one is from like TD Cohen's, the big banks, the Canadian banks. And then there, yeah, somehow you can using the tables to write the stories. So like this one, they are trying to talk about like the acquisition histories for the companies. So they are using the big table to list down like from like the real early times to the like recent times, and then they using the bullets make um to make a clear like the detailed informations and and also yeah you don't need to shadow the tables and then they using like the color code to indicate like the different focus and for the bankers they really like to use in bullet point make it concise and informational right next one yeah, also yeah, from like the Goldman stack, you can write something there in the bullet points, and then also somehow they don't like to shade it. So they and also the for the borders, they don't want to have like the vertical borders or like the right or left borders. They only have like the bottom and like the top borders, yeah, something like that. That's like just like the slide makings, some like the tricks or something. Yeah. And also when we are doing like slide deck, we're gonna draw like some charts, visualizations to let like the audience to easily access to our logics. So like the column chart, the bar chart, histogram, the waterfalls, and there's like some recommendations for us.
Yeah,
Like when you
that is the yeah, so that is how we are trying to make the slide deck. And there's some formats we're using, like we keep it constantly so that after for several different projects, each of that looks similar. So 1/4 of the page for 4 by 3 screens, 1 out of 6 for 16 by 9 screens. So for the size of the graph and mostly like 4 different categories or the colors that you have for the bar chart, and especially if it's going to be like waterfalls, like 7 is the most. No horizontal grid lines that I noticed that it's just totally empty right here. So some of them are actually having the horizontal lines, but the horizontal grid lines, we just get rid of that. That is not professionals for investment banks. And also like trying to make sure that even the font size for the labels and also for the data itself, that we have to make sure that everything is keep it constant.
And
And
also, if you after you just draw the chart and you have to explain a little bit, so you can have like the blocks right there to explain, oh, how it forms, or like the logic or some fact or some
or
results
one
that you.
one sentence rationales or ideas that regarding why you put a box over here, it's going to be the good ones for you to remind you when you're trying to present, and also for people to clearly understand why you put a graph over here. So yeah, we would definitely send out this for you to reference like how to make a good slide deck as well.
Yeah, and this is the line chart. Yeah, the left-hand side is really similar. And yeah, this is just like some guidelines. And when you are doing like the line chart or like the bar chart or even like histograms, we want like to combine like several chart into the same stuff. Like for the left-hand side of the graph there, this is like the monthly inflation rate, and then we just add like another like the arrows to indicate like the variations or like the growth. And also in the right hand side, we just label like the CAGRs and some like the blocks to just demonstrate or like explain some of the fact. So that is how to make like line chart looks professional. And also like some like the vertical lines to check like the time periods. Yeah,
Yes.
so when you're yeah, and also like the similar stuff for like the pie chart. Uh, Yeah, similar start for pie charts. Label it and to have some like explanations. And also like one thing to focus on for all of the chart, we don't like the 3Ds, especially for bankers. They don't like 3Ds. So we only like the two dimensions. And yeah, and especially like for the pie charts, heat map or regression scat plot, we want to using like the color in the same spectrums. Otherwise, it's really weird. If you have right here, there's like blue and red, and somehow we just include like the purple or the or like some pinks. But if you right there is there's like the yellow or the yellow, so that looks really weird, right? So we're not doing that. And and also, yeah, do not using that much of like the pie charts because like if you are have some concept in like data science or like stats, somehow the pie chart is not really good representations for to explain the data. You can using like the pie chart to break down a little about like the revenues or like the shareholders who owns like the how many portion of the shares like the you can just have like using the pie charts, but if you want to do with like other stuff, pie chart maybe not a really good choice.
Yeah, so just trying to use as much as the bar graph or the column chart instead of the pie chart. Pie chart only use, I mean, like most commonly just used for the shareholder percentage breakdown. Besides that, just use the bar chart. It's better.
Way better. Yeah, and then the heat map, regression somehow they're gonna use it for looking at like some
Patterns, the trend for the companies within 6 months, 3 to 6 months. I
yeah,
mean,
but for the
for-
heat map, not that much of like the companies use that. Probably when you are doing taking like the asset management portfolio, they are trying to seek out like the correlation between like the two stocks, but otherwise no, not that much of like the
I
heat
mean,
map they're
like
gonna
for
use.
heat map, I sometimes that you just use to indicate which factor is much more important to consider for the company or to pick up the companies to compare something like that.
Yeah,
They're using this if they have the data as they are the banks, they know more than we are. So they
we don't
definitely,
need to use that. We don't
yeah,
need to
but we
use
don't
that.
need to use that. Just and sometimes regression is not necessary to have it as well.
Yeah. Next. Oh, and then the general slide makings. So firstly, when you're making slides, do you guys have like any like this like the experience in just like the slide masters, just like the titles, the font, the oh the font size, all the stuffs like to make it or alignment to make the margins. That's like the one advanced like the slide making, like the tricks. And yeah, here's like there's some recommendations. And I believe that Acme already set up like several like the rules in like the slide masters. So you can just use that.
Yeah,
But
I
if you
believe.
want to adjust
Yeah,
it
I
to make
believe
it
so.
like your own styles, feel free to do that. Otherwise, it's fine. So
Yeah, so just yeah, I just put a really simple one over here. But like if you would like to adjust feel like for block, you wanna add the subtitles for it, feel free to just adjust it on the slide master. That means you just need to edit once. You don't have to repeatedly like edit that 4 times, 5 times for one slide deck. Okay. Yeah, so I think this is going to be more efficient if you doing this ways. You add another horizontal lines and another text box for the subtitles, or you wanna like illustrate more different styles like 3 column or 2 columns, etc. Then just add it in the slide master. All right. Yeah. And lastly, I just want to mention a bit about like slide deck makings. The same as what Horace just mentioned, that put everything in logic. So you have to make sure that you can tell a full stories for each page to that everyone can follow your ideas as well.
yeah, and also I will introduce like several like the source to support like the slide makings. And for the graphics tables, there's like several like there's like something online and I will just demonstrate it. And also like some slide makings resource. and we will share all like the resource that we have and to you guys, and you guys can reference it to make the slide. So let me quickly go through like for the graphics. Okay, there's like the Apache like the E charts that is like the a if you have like some coding experience like the Javas or something, or if you don't know, it's totally fine. So there's like is that okay? Let me to share screens. Let me to share screens. Yeah, give me the host. Sure. So let me to share screens. Um, do you guys see it? Not this one. Yeah. So this one is the E chart. So uh, for one. Okay. So this is the E chart. So this like the open source the libraries, and you can use it to draw like really wonderful or like the graphs. If you have any like the coding experience, like for the pie chart, so or like the stack bar or something, or even like the pie chart, you just click here, and then they just have like something, and then left hand side this is the code for Javas. And if you don't know code, it's fine, and then you can just copy paste and then put it into the chat GPTs and then let it to generate for you. And then you just paste it back, and then you can have really good like the graphs. And then you can just download it and then paste it into um your slide deck. So that is some one options for you to draw the stuff. And then also I believe and then also like the second one is about like the think cells. Think cells is just like the attachment or like some add-ins into your like the presentations. There are like several like the different type of like the models or like the graphs, and then you can input the data and then they can give you the graph. Oh, so that one probably you have to pay or if there's any like the resource related to the thing cells, probably you can research on your like the schools like the web page or libraries. Probably there's like something related, but I will help you guys to find if there's any like the free versions for the thing cells that I can share the code with you guys. And then the third, uh, and then the okay, the third one is a macro graphic. So that one also you can request it through their
Yeah.
own website, and then you say you are a student, and they will email you a free version for
Yeah, I think
yours.
micrographic and the thing cells are all the adding tools in slide deck. So Forrest, can you just yeah, you definitely have the micrographics on the top. I think you
Yeah. Okay. So let me just share something really quick. So if you when I want to just draw something, some tables or something, so there's the element that's like the think cells, then I just add probably a stacked bar right here, and then they will just give me something, and then you can change the data like right here, data tables. Yeah, there's data tables. You guys see it, and you
no,
can.
we can't. We can't.
Oh shoot.
But
So
it's
there's
fine. I
like
mean, like it just bumps out. Yeah, okay. It
yeah,
just
there's like the data table. You can change like some words, and then it just gonna show something right here. So you're gonna change. So if I just put numbers and make it something like that. So that's like the thing. So it's really easy attachments or like the add-ins to help you to graphs. And also there's like the macro graphics. And I'm not sure about like this version, but I didn't use that for a long time. But this is also like another like similar like the add-ins, and that's for free. You can request it online through their
website.
the web official website, and they
Yeah.
will email you like really good like the 1 year free version for you. And then how about the last one?
I think the last one is whether if you are familiar with the code, probably Java, Python, or Visual
Visual.
are the good stuff that you're using because Visual, I think it's what McKinsey people they're trying to use. So yeah, I think most of the graphs from McKinsey's reports are actually using Visual.
Yeah,
So
this one, the Visual. Yeah, they can.
so
So there's
you
like
can take the live demos, and if you are
mm,
you have some like OpenAI source key or something like that, you can like definitely using like visuals to draw the graphs. I mean, just keep it constant. We introduce so much different tools, but like just keep it uh constants that you just use one tools to for you to draw all the graphs.
Okay, so it doesn't mean that you have to using like the code to draw the graphs. You also there's like some like the tools like the graphics in inside the Excels, and they can use that.
Yeah,
Also,
you
those
can
are
use
fine.
Excels
It's just full,
or
yeah.
presentations, definitely using the
Mm,
tools that you are most familiar with, but like just keep it constant. That's
yeah.
everything's supposed to look similar to each other as well. Yeah.
Okay, and then nextly is about like the slide makings. There's like really good resource called this one, 50 folds, and there's like lots of like the banking slide deck as the reference. You can use it to draw the tables or like to set up the page. So like for this one, this is company overview, and
I think they collect almost like really good like big firms
yeah.
presentation slide decks.
And
So
like this one, they are doing a lot. They're different type of how to approach to like the company's overviews, and there's like the examples, and then you guys can use it as like how to approach to your slide deck. And then there's a lot like from company overview, corporate structures to share price analysis, regression, and DCF. Yeah, let me demonstrate a little bit about like the DCF how they approach. So. So mostly like for this one for Goldman's or JP Morgan's, their DCF just like to paste the tables. So or and including like several points to explain.
I don't think like this is
Really good one.
the good demonstrations that see it's just like a guide that Goldman's people
Mm,
start teaching new talents about like how to conduct DCF. But like for the comparables that there are so many ways to illustrate the comparables that the company choose or
yeah.
the average itself. So feel free to use those as the reference as how to
Yeah.
construct, build up your slides as
Yeah.
well.
Yeah, like multiples, they can join this way or this way.
Yeah.
So this is like the two
Or
way
definitely just paste a big like
table,
well-shaped table. Yeah.
table, put a table right there.
Yes.
Or
So there's
or
lots of stuff that you can use online as long as this page provides lots of informations. And
yeah.
also if you have like other like those prestigious banks reports or slide decks, feel free to take a look on how they arrange their
Mm.
page and utilize some of their ideas. That's
Oh,
totally fine for you.
okay. And then the last one I would like to mention is the football fields. Just what I draw it in the Costco's and what we draw it in the Costco. So like this one. So for the football fields, that's really good questions. It's like mostly you look at just like the football fields in the middles, and then uh somehow you can using the Excel to draw it, and you're just using the stack the bar chart, and then to just to adjust like the colors, and then you can figure out like the something shape or something as this, and you just copy paste and right here, and then you have some descriptions other side. And that's fine. That's like the football fields. Especially you have like lots of like the valuation method, like the firstly, including like the historical trading range, 1 month, 3 months, or some things, and also like the market, like the average, like the target price, analyst like recommendation market, the target price, and then you can use in different method like the present transactions, comparables, and DCF. Somehow there's like the LBOs using LBOs, and including this football fields, and you can easily to look at to set up a range or like the price to see the intrinsic values. All right.
Yeah. Yeah.
So,
And if you are not familiar with like some of the tools, like how to use
mm,
Excel to draw the graphs, Google it. And there's some
YouTube, they are really simple,
YouTube's,
simple
lots
like
of
the
tutorials over there.
tutorial
Yeah.
videos, and it's
Yeah.
gonna help you a lot.
Check it out. And I think those are really valuable for you to understand how it works. So, yeah.
And